Hello and welcome to the lecture for part 1 of chapter 19. So in this chapter I'll talk a little bit about different types of manufacturing environments, specifically about job order costing, and I'll compare that to process costing, which we'll study starting in the next chapter. I'll talk and then I'll focus in this chapter really on job order costing and how that works. Okay, so some key terms here. So cost accounting, as I mentioned in the introductory lecture, is part of managerial accounting. So cost accounting is how we measure, record, and report product cost. That might be the cost of maybe a mask if we have a business where we're making protective masks for people that are going out and worried about the virus. That could be our company. It could be, I'm going to use an example of a home builder. So it could be we're building houses and we have trusses and 2x4s and plywood and all the different kinds of things that go into a house and labor. Or it could be a hospital where we're providing services to people. So that's cost accounting, is looking at the costs of what we provide to our customers. Now, the two different types of systems that we'll talk about in terms of how products get made is a job order cost system and a process cost system. So a job order cost system is where each product is unique, and we want to gather the cost for each particular product we're working on. So an example might be a custom motorcycle shop where each motorcycle is customized for a particular customer. In that case, I would want to know how much motorcycle number 1 cost versus motorcycle number 2 versus motorcycle number 19, because each one is a little bit different. So in that case, we'll track the cost to each individual job. In the course of this lecture, I'll use the example about a home builder that I think will make that very clear. A process cost system, on the other hand, is where every product that comes out is the same. So maybe we have a sawmill and we're making 2x4s. We're making lumber, and one 2x4 is the same as the 2x4 before it and the same as the 2x4 after it. So there's no customization or distinction between the two. Maybe we're a company that makes bags of cement. Every bag of cement is the same. So a company could produce more than one kind of cement, but we would use process costing within each batch that we do, because within each batch, all the products are the same. We'll start that in the next chapter. Now, in the real world, a lot of companies use both systems depending upon how they're doing things. In my old company, Big Toys, we had a sawmill in eastern Washington that made all of our lumber for us. And at that facility, I used a process cost system because every piece of lumber we made was the same as the one before it and after it. But when it came time to make playgrounds, we used a job order cost system because each playground was unique. So here's an example that, like I said, I'll use throughout this chapter, is a home builder. So a job order cost system would make sense for a home builder where each home is a little bit different. Each home might have a little bit different layout, might have different siding on it, a different type of roof, of course, different amenities in the kitchen, different kinds of countertops, all of that. So each house is different, and a builder would keep track of that by maybe the lot number or the address or some unique identifier for that particular job. And as they're working on that job, they'll collect costs associated. Here you see lumber and trusses. There's a concrete foundation there. So that we'll keep track of direct materials that go into that. We'll keep track of labor, guys swinging hammers, and carpenters and plumbers and electricians and all of those kinds of people that are doing work on the house. And then we'll look at overhead. And overhead might be the cost of insuring all of those workers for their safety, the cost of supervisors that drive around and check on them, that sort of thing. So here's a short video. Hopefully it'll run here. So see if you can guess what this is. A friend of mine works at this company that built this parking garage. So you can see concrete going into it, steel, lots of labor, lots of machinery lifting things into place. pretty soon. There's some metal and sheetrock there for stairs and brick that goes on the front of that. And then there's paint. It's almost done here. There goes the paint. So there's all kinds of direct materials going into that. Of course, you can see all kinds of labor, all those trucks coming and going. And then there's overhead. There's people supervising it and the engineers that drew it and all of that. So if you couldn't tell, this is the parking garage at, I think it's Red Wing Casino out towards Yelm or Nisqually. So a job order cost system is going to take a look at direct materials at the end of the process, direct labor that enters the process, and then we're going to apply overhead to the jobs because we're not going to incur overhead on each job. We're going to have to figure out a rational way of applying it. As an example, if I say these 3 jobs were a custom factory of some kind, I may have one supervisor. Okay, that's my factory overhead, or one example of factory overhead. I'll have to figure out how to apply that to each of those jobs. So as those costs come into the system, as I'm building products, I'll allocate them to each of those jobs using a job order cost sheet. That's how I'll keep track of the cost for each job. And then when the job is finished, it'll transfer into finished goods. From finished goods, it'll stay there until a customer buys it, and then it'll be transferred to cost of goods sold. It'll end up on our income statement. So in the example the book uses, they have, they're building guitars, custom guitars in batches. And so we have material inventory that comes from the raw material warehouse, the storeroom there. That material flows into the factory when a production supervisor issues a material requisition saying, hey, I need some lumber and some screws. That will come over to the factory. Inside the factory, we have labor, which is, of course, people being paid for altering the product, and we have factory overhead, heat and light and supervisors and forklift drivers and all of that. So as jobs are finished, they move over to the finished goods warehouse, so the cost is going to follow them, and then they go to cost of goods sold when they're actually given to a customer. So we have different kinds of records to keep track of different types of inventory. So in material inventory, and again, this is showing a manual process, the same could exist in a computer system. Of course, we could have a database with a record for each different kind of material. So in this case here, I'll have an account in my accounting system called materials, or raw materials, some companies call them, and there's a subsidiary ledger behind that. If you remember back in Accounting 201, we had subsidiary ledgers for accounts receivable and accounts payable, individual sheets that tracked the detail that support by customer or by supplier that support the total. It's the same thing in material inventory. I'll have a sheet for maple in this company, a sheet for oak, a sheet for hickory, and whatever other kinds of inventory I have. And on each of those sheets, as I bring inventory in, I'll indicate that the inventory increased and what the dollar amount was. When inventory leaves that building, I'll show a decrease that it's leaving here and going to a particular job. So I'll keep track of that on a perpetual basis for all those different types of inventory. So I can stop at any given time and know what it is that I have on the shelf by looking at these records. The same thing exists with work in process. I'll have a control account called work in process on my balance sheet, and that's going to be supported. If you want to think about these job order cost sheets as being like pages in a binder, I'll have a page in the binder for each job I'm working on. When I incur cost, I'll add those costs to the job order cost sheets. I could add those up and I would get the total that's on my balance sheet. When jobs are finished, I will transfer them out. I could take that job sheet and transfer it over to my finished goods binder, if you want to think of it like a physical binder, and that'll have the cost of all the goods that are in my finished inventory, each job that's been completed. So the flow of costs, a supplier will invoice me for purchasing material. I'll have a receiving report that shows that material actually showed up. And you can see here I have a ledger sheet where I've updated that for particular materials. Okay. And then on B there, the material has been requisitioned, so somebody in charge of production in the factory has indicated to the warehouse, I need some materials for these certain jobs. So they issue those materials. Then we update the job order cost sheet with the cost of those jobs. So I needed $2,000 of direct material on job 71 and $11,000 on job 72 of materials. Now the journal entry for that would be when I buy the materials, I'll debit the materials account and I'll credit accounts payable. Okay, I'm receiving material and I owe the supplier money for $10,500. Then I'll do a journal entry where I'll debit work in process, okay, my factory, and I'll credit materials for the amount, the value of what left the raw material warehouse and went into the factory. In that case, a total of $13,000. $2,000 for one job, $11,000 for the other. Every time I make a journal entry that touches work in process, I'm going to need to update those job order cost sheets. That's critical. So that's how we got material onto the job order cost sheets. Now we'll look at how we get factory labor onto the job order cost sheets. So workers in the factory will fill out timesheets that indicate how much time, when did they start, when did they finish, on each particular job. So if you can imagine a factory where we're making those custom motorcycles, we might have a whole variety of people in the warehouse there or in the factory that are working on the different motorcycles. So it's not like they come to work and clock in at the beginning of the day, do a bunch of work and leave. They have to keep track of what they work on so we know how many hours of the time we're paying them were for one job versus another job. So when we process payroll at the end of the pay period, we'll look at those time tickets and we'll record the cost for that employee to the particular job. In this case, in job 71, we incurred $3,500 of labor. In job number 72, we incurred $7,500 worth of labor. Now, we could do some more additions if we work on those jobs in the next pay period. We could keep adding to that until those jobs are finished. The entry that we would make to accomplish that would be to debit work in process. And again, every time we debit or credit work in process, we're going to touch those job order cost sheets to keep them updated. So we'll debit work in process for $11,000, the total amount of labor, and we'll credit wages payable. When we pay the workers, then we're just paying a short-term payable. So that's the end of the first part of this lecture. The next part we'll pick up on factory overhead and talk about how to do the calculations to make application of that factory overhead to the different jobs that we're working on. So thank you for your time, and please don't hesitate to give me a call or email me if you have any questions. Thank you.